All right, first thing we're going to do is just mention the coupons, current coupons, because they're going to be important after I do this little update with you. The Bull & Ox still has that 90% coupon recurring lifetime. That's a great coupon, DTR90. The Apex funding, 80% off DTR Apex. That DTR Apex coupon is always the same, and it always represents the best current discount Apex. The DTR 90, that typically changes when these things expire, but I usually make a new one. This one's good until the 10th, which is a couple more days, I believe. Just a couple more days. So remember that. Take advantage of that. Better to trade with these instead of your own money, and then qualify on these. And I'm going to show you how to do that in this video right now. So I want to actually do a little video for you. I'm going to get rid of these things so you can see the whole kit and caboodle. We're short right now. We are short the market right now. So let me take these coupons off. You could always scroll back and get them. Oop, I just... There we go. And now let's put our accounts back up here. I think we're in this right here. So I'm also recording part of these things because I feel like right now pretty motivated to tell you some certain things, like what we were just talking about before, about that quad rotation. So I want to start off talking about some tips tonight. And again, you should make this, and I'm trying to do this for you. There's a few things I'm doing tonight. I'm doing another cheat sheet. This is for the HPS Super Signal by itself, and this is going to be the best cheat sheet. You know, I already got the 2020 bull flag. I also have trading a downward channel cheat sheet. This one is going to be the HPS high probability, my what we call a quad rotation divergence for the cheat sheet. And this is the number one setup. So I'm going to print that out for you, get it all set out to everyone. Hopefully it'll be done tonight. That'll make 3, and I have one more to go out as the series, and that's all going to the members. So I want to really get that done tonight, so I'm not going to dilly-dally. Anyway, the main thing the first thing I wanted to talk about, and I just mentioned it before, and I said, you know what, I better record this. So right now I'm short. We're going to keep that short on there. I'm just going to take this off so you can see my stochastics. For those that are not familiar with with my type of trading or who I am, I host Day Trading Radio. And again, right now I'm just talking to a lot of our members at Day Trading Radio, but this will probably go out into the public. So an introduction to myself, to you, or from myself to you. So I run daytradingradio.com, and I've been running it since 2007 to teach trading, stocks, options, and futures. And we really concentrate a lot on futures. The stocks are typically swing trades, and I do love that, getting into great stocks and letting them work for you. Typically my stock holding could be a week to a month, or sometimes even longer. So that's the type of stock trading I apply the same techniques to the daily charts and the stocks to find our setups. You'll see that when we do income trading, what I call day trading or trading for income daily, someone wants to do this during the day, being in front of the computer. Well, that's what I specialize in, trying to show you where to make that money, where to trade. And that's the hardest part, because the key to trading is not trading, And I can't stress this enough, but I could stress it because I started trading full time in 1996. I've learned every which way to lose money. And the object is not to lose money as fast as you make it. There is going to be days that you're going to lose money. That's okay. But we're going to eliminate most of that. You don't want to, you're not a gambler. This is a business. And I'm going to show you how the business runs. I'm going to show you the tips of how the business runs. And you could apply this to you. And you're going to see it work. You're going to see it work. But once you start what I call corrupting it by trading outside the designated criteria, the entry criteria, and you start just randomly trading like you're walking through a casino and just put some money on the table, not knowing what you're doing, you're gambling at that point. So that's why 99% of traders, day traders, fail, because they cannot just sit there and develop the patience to wait for the setup to come to them. I could show you setups that work every single time, but they might not show up every day. So what do? You're a day trader. You want to make the trades. So you're sitting in front of the computer. You got to make the money, right? But that's the problem. The market, is great for longer term investment buying and not have to worry about it. But day by day, for an individual trader, I'm not talking about big funds and stuff, but the day trader, someone's trying to do that. The volatility, the algorithms, the swings and stuff, it could be very, very taxing and very, very confusing. Somehow traders tend to do the opposite of what you actually want to do. They get excited and chase things where they should be selling or shorting. They, in the face of fear, they're selling everything where you should probably be, analyzing what type of trader are you? Are you a short-term trader? Then that's okay. You're not looking. This is not the end of the world. This is what we have throughout the day. But lots of times you get down here, it's like, oh, we're selling off, and by the time you're in, you're short here, and then it moves back up, and then you feel you're missing it, and you get in, and all you had to do is, apply some of the rules I'm going to give you. If you apply the rules, they're going to keep you out of the trade, and if you apply the rules, they're going to get you in the trade. And the less trades that you're in, the better you're going to be on. So, because the object here, and we'll kind of go into this a bit right now. The object here is to make money, trading the movement of the ES, and what this will be a ES future video slash MES futures type of video. So just the concept, and you can apply it to other things, but in this case, we're talking about intraday trade in the futures. And we want to, buy at a certain level and sell at a certain level, or short at a certain level and cover at a certain level. And how do we determine these levels? Well, that's what I do. I determine what we call our pivots. Pivots in the market are moving, understand that the market's moving down, then it moves up, and that's a pivot. Moves up and then down, and then there's another pivot on the top. These pivots connect. These are little lines in space, and these pivots connect with lines, and these are what cause, what we see, channels, wedges, different patterns play out because of the different pivots line up. Very easy to understand the concept of a trend line. You just have to have two or more pivots lining up. You just need 2 points to make a straight line. So if you have 2 points, you make a straight line, and it actually comes back, the price comes down to it, bounces again. It really reinforces it. And you don't have to worry about reinforcing it. You already have the lines. What you should be doing is actively buying into this. So many people will sell into this, and then they just get their heads ripped off. Not everyone. Some people are a little enlightened a little, but it's not about that. So we have some tools. The tools are here. And just before we were talking about if we were in this market, and I wanted to zoom out here, and I have four bands of stochastics in front of us. All right, so back here with you, and welcome to the new people joining us here. So the video tonight here is a lot of different tips, but the first one we're talking about is something, I went into this already. I already videotaped a little, so you already got this on there. But if you're just joining me, we're just kind of discussing, and how I always discuss every single day is how it's important not to be in the markets more than it is to be in the markets. Most of the time you're going to get a lot of chop, and there's going to be certain areas, and kind of explain to you what I'm looking for. And what my job is to identify for those short-term traders, these income traders, we like to call them, people that come in during the day and want to do this as a job, sit down at the table and make some money trading the futures. Now there's all kinds of people doing this, different time frames, bots, algorithms, every which way. But this, what I'm teaching you, is the it's almost I kind of compare this to card counting. That there's nothing guaranteed in the markets. There's a lot of volatility. There's a lot of news that comes out. There's nothing really guaranteed, but there's a lot of momentum and some technical levels that we could read. And there's thousands of indicators you could use that kind of measure certain things. And most of these things are reactive. But over the years, I've determined so many different ways that are not dependable, but only a few that are, and then refining those refining a system where we identify all these different things that have to come together at the same time, and it almost sets up to the perfect trade. So that's what I call the high probability methodology. It's the highest probability trades, and it's based off of a set of indicators, the confluence of different things setting up. The original definition was there was 5 indicators I'm using, and 3 of the 5 had to be lined up or active, meaning we had to be a recognizable pattern. We had to have the divergence. We had to have a reversal candle, or a combination of different threes. But the most important thing was the foundation was the divergence. Over the years, even refined it more to a point now. We've added a set of 4 stochastic bands. Normally, a regular 9-3, 14-3 were our standard go-to default stochastics. But now, I added the 44 and the 60-10, and this keeps you out of the market to the most important, biggest pivot areas. And it's because each one is relative to the time frame that it's measured out to. The 9-3 and the 14-3 are always defaulted. That's what George Lane's kind of originally used it. On his charts, on his 1 minute chart and stuff, it was always defaulted to that. But you could use stochastics and divergences on all different time frames. Well, I use it on the 1 minute time frame. And then I added the 60-10, and the 60-10 really is, and I'm going to just go over this once. I have to explain to you more if you don't understand the concept of it. There's another time. There's a lot of videos on it from me, or you can just become a member. The concept of the 60-10 is it represents the 5 minute time frame if you're running the 9-3 on it. And that's a big, very important time frame, because when you have the 1 minute and the 5 minute acting together, and the 5 minute just starting to turn up, this is what gives you the big pivots. And a pivot is a change from one direction to another. So you have small pivots represented by a pivot here, it goes up, a pivot here, it goes down, a pivot here, goes up, pivot here, and then even micro pivots. You could even zoom in and look at this. But we look at the 1 minute pivot and the 5 minute pivots. So the 1 minute pivots, you can see there's very easy to represent. If I'm trading, and most of my trades are going to be a minute to 3-4 minutes at max. It could be longer. That's just saying, we identify the setup, we get our move, we start taking profits within that amount of time. You can keep the trade on for longer, as long as you use your trailing stop. I'm trying not to look at the chat room, because then I get distracted and I get off thought. So I apologize if I'm not answering anybody's questions in the chat room at that point. So when we have the so that's why I came up with the quad rotation. And what that did is that really just waited for the optimal time, because even though we have these smaller pivots, the bigger trend is still intact. There's a small trend up, small trend down, small trend up, small trend down, small trend up, small trend down, small trend up, and now bigger trend. See the big trend line, the lower trend line, big trend down, bigger trend, a big trend up. Here you have these bigger trends, big trend down, even 1, 2, 3. So we call it what we call a 1, 2, 3 pattern. So you need 3 pivots, 3 big pivots to make a 1, 2, 3 pattern. So what we want to do is identify the 5 minute bigger pattern and the smaller pattern together when they all line up. Because that's going to give you the move on the small time frame. It's also going to give you the move on the big time frame, and you're going to get the bigger move. Simple as that. Now, if you could just wait for that, you're going to have the best trades. And let's take a look. Let's just kind of go back here for a second. Let me just get this off, because it's going to be distracting here. I'm not watching my trade there. I have a trade on here. Let's take a look here. All right. So we're looking at the quad rotations. And if we zoom out, we have the still. Let's go back here. And I want to talk about this more in the overnight session, because right now we're in the overnight session. So we're actually going to be able to apply this tonight, I think. So in the overnight session, when things are not as hectic, or there's not program selling and buying that is as prevalent as it is during the open market hours. It's a big difference. There is stuff going on, but not as anything close to what's going on during the other hours. And you can see here, just taking, I call the bird's eye view, you can see these little move down, little move up, little move down, nice move up, little move down. I put these channel lines in there, and that's something that the market tends to do. And how do we identify when that channel is getting to an end and where we're going to look for that bigger pivot? We want to really be in here and get the biggest move. This is a 20-point move. This is like a 30-point move. This is a 40-point move, 40-point move, 40-point move. These are tremendous moves. All we want is 5 points out of that. Not going to be that hard, but it is, because we trade too much. You trade too much. So what you have to do is take that bird's eye view and say, all right, realistically, what I would like to see people do is wait before you get the quad rotation. At least when you're in the quad rotation zone, especially overnight, you're close to a reversal. And what do I mean by that? If we take a look at each of the quad rotations now, we have the 9-3, the 14-3, the 44, and the 60-10. And I'm just going to circle these representative when they all lined up. I'll put a line in here too. You can see. You have that. You have a line here. Quad rotation here. Basically, you're giving, and what I'm doing is I'm giving that circle because that circle is going to encompass right when we're ending into it and coming out of it. So there is it's very hard to identify the exact bottom when you're looking at a quad rotation, because you're dealing with a 5-minute time frame too. And this is very important. But so you do see, like down here, you do see there is a kind of a flat line that goes from here it just, it's in that zone right here, right? And we can even go out here. It didn't go down any further, but that's the zone. And then the next time was over here. And I'm just going to make a big enough circle so you could just get a feel for being in the right area. Now, being in the right area is good if you have the fortitude and the courage and stuff to hang on through these. These candles could be 3, 5, 7-point candles, and you're trading the ES. That could be, hundreds of dollars in the wrong direction if you just get it wrong in this volatility. Not bad if you're using the prop accounts. That's what I always say. Look, don't trade your prop account. Don't trade your funded. If you get through your evaluation process, which you would if you just did it this way. But when you do not trade it during these volatile times. Wait, keep it active, and wait for the HPS zones. Don't have to trade with that. Only pull it out. How you go over there and you pull it out. Oh my God, market's dropping here a bit. Here, selling off. When you have a quad divergence, now you say, what's a quad divergence? Well, we determined that every time we get down into kind of a quad rotation, there's a better chance for a move up. Better chance to move up. Better chance to move up. Better chance to move up. Here's one. All right, we came down here. I marked it off. Nice move up, right? We zoom out here. The circles represent each time that 60 gets under the 20 line. And then here it's kind of up, and it's not really coming back down. Here is kind of close. It didn't really get down to the 20, but all three of these came down. And over time you'll realize that those are good signals. Oh, I messed up my chart there. I apologize. I don't know what I did, but come on, Johnny. I always do that. Let's go out, zoom out again here. All right, so here we are, back here. This one right here, it was a fast little pullback. It wasn't a quad. You probably might miss it if we try to, you try to brain wash yourself to stay disciplined and wait for a quad. You probably wouldn't take that and might have got away. But, once you start to get all four stochastics rotating in your direction, the odds are you're going to get more upside, because this is the bigger boat down here. The 60-10 is the big boat. Once that turns, that means the 5-minute is starting to activate. And when the 5-minute activates, or a move, typically on the 1-minute time frame, a move from the stochastics, this here's something that might hurt your head again. The average move, and because I do this all the time, I'm sitting in front of the computer all the time, I do this. The average move from the oversold to overbought level on the 1-minute time frame is 5 to 7 candles on the 1-minute time frame. So a lot of our trades, again, will be like at the top 5 to 7, before you get overbought. And when you get overbought, remember the market's going up and down and up and down. So sometimes you get overbought here, and then you get, then it comes back down, and then it goes back. But we don't deal with that. We want to get in here and get out of here. So lots of times I'm always paying attention to that 9-3 and saying, all right, we got our entry, whatever it is. Let's get out on the rotation. No pressure, winner. Or if you don't, then you have to deal with the pullback and the aggravation of trying to get it out again. Oh, should I take it? No, it comes back, then it goes down lower. You're not going to get all this. It's just, you're not. So you have to be understanding that your criteria has to be super aligned. It has to be so perfectly, here I go again. To be great at something and to be really good at it, you have to have the patience of a professional baseball player, a professional golfer, a professional athlete. That's the type of dedication and discipline you have to have, not trading, because you have a pocket full of kryptonite, but a pocket full of cash, right? And you're sitting in front of the computer, and you're not going to make anything if you're not in the market. Wayne Gretzky, you miss 100% of the shots you don't take. I believe in that, but you have to take the shots when they appear. You don't want to be just taking a shot if there's someone in front of the net. You want to get your opening, and you want to take your shot. So take that, Wayne. This was a quad rotation right here. That's like a live one in the wild, gentlemen and ladies and gentlemen, in the wild. So here we had a quad. I didn't even circle these. So we go back and we kind of zoom out. And I said, every time we have, just look at the 60. The 60, if it's down there, touches that 80, and they all line up, that's typically a quad, right? There's a quad there. Look at the direction that the trade goes after a quad. Now, what are we looking for? Now, what we're looking for, the holy grail of trades, is usually when we have a 60-10 or a 44 divergence, meaning the price comes down. Now, this is a little high, but this is where it becomes a little bit more experience in your trading, understanding and knowledge. Like when we zoom in and we're trading, I'm not looking at a bird's eye view as much as I should sometimes. What I'm looking for, I'm a little tighter on these. Like right now, I'll be identifying this channel, and I'll saying, well, we're inside of a channel. We're looking for the divergence. We know that channels are the habitat of the elusive divergence. And when the elusive divergence sees a channel, typically that's where it's going to fly out of the channel. And this was a beautiful example of that. It was a nice little lower low. We started to hold above the 80 right there. That tells us that the momentum is shifting, and we were going to go. That's just one example. We're going to show you other ones. Because those were very small. That's very small. The big 5-minute ones where you pull out your funded account and you trade, there wasn't many today. And that's going to be the toughest part for you to handle. It's like, wow, there's nothing. There was a couple good sell side divergences here. There was one here. There was one here. I think shout out to Rico Beagle for calling out one. We had a good trend line here. I took this trade. It was a good short. And we got a quad rotation here. And sure enough, the bounce. What came first? The bounce, the trend line, or the quad rotation? Everything lined up here. When you have a perfect setup of a quad rotation and a recognizable 1, 2, 3 channel, and this is a 1, 2, 3 channel. It is. You have your channels typically start when you have a major pivot and a major channel. You're going to start your channel, downward channel at the highs, and then your first low is typically a pivot. And then it bounces, and then if it comes back and makes another pivot, or another bounce, then you have a straight line. And then what you do here, because you have 1, 2, 3, you have three points. If one of the sides, you could be 1, 2, 3 up here and came back, but it was 1, 2, and 3 here. And the reason we're looking at that is because it gave us a pivot. And at that point, right about here, I'm putting in that trend line. I'm waiting for that to start to turn back up. And once we see the pivot, then I'll drop that line in there and just kind of keep it out there. And right when we put that line in, I'll copy it, and then I'll drag it and put it right at the top of the pivot on the top there, and that would extend all the way down. So then we have this channel we can start to concentrate in. Channel is super important. Once we have a channel, then we could go to work. And the only time I want to trade the channels is on the lower trend lines when we have a quad or divergence or something, because that's called the HPS setup. Now, if it's a divergence, it's a must-take trade. And this wasn't a divergence, but it was a lower channel line quad rotation. So if we were looking at divergence as being the A plus of, a divergence plus a VWAP, divergence plus a channel line, that's the holy grail trade. This is a little bit underneath it because it's not a divergence, but it's still a great setup, a quad rotation channel. It's an A plus setup. You have to take that. I would take your funded account and probably trade that on the MES. But after you see how well some of these divergences work, and when they show up, they're there. It's just they haven't really. And that was it. I mean, I just went through all these last few times that we had a quad rotation. I didn't mark this one off here, Johnny. Well, better mark it off, or else they're going to call me a liar. That was barely hit the 20 there, but anyway, all lined up. This one almost all lined up, but even if you got in there. All right, here. All lined up, So my universal quad rotation line, if you're watching the show and you're watching the map, I usually do this. It's a universal. It's the four hashes down, and and I always use this line. That's where you put your stop underneath that line. But look at that. The big picture now becomes, hey, maybe because this 9.3 is oversold, and the 60.10 is oversold, that we're going to have a bigger pivot, and we probably have a good shot that this is going to go much longer, or we want to hold on to it longer than the rotation, the first rotation. Typically, we're getting out on that first rotation because it usually comes back down. But, in this case, if you do think you have something going, and actually you came back down here, almost a double bottom. That was a good, clean move back up. The other thing you want to pay attention to is the stochastics starting to move all in the same direction. If they're all moving in the same direction, the odds are that's going to continue to move in the same direction. There's no reason. It's probably, that's all of them, not just one. Sometimes you'll get a 9.3, it'll start to turn up, and then it'll drop back down. If you could kind of measure out, like, oh, this one's just at the 50, this one's at the 50, this one's above the 30, this one's starting to turn up above the 30, right there is probably where you should be in, right as you get above the 20-period moving average, too. This is starting to move up, even though this is a little overbought, actually, you take your first profits here. If you're holding your break-even stop, once you get up to this level again, this is a pretty decent trade, and you probably want to hold it. You want to hold it as long as you can. That's just always hard to kind of gauge that because news, you don't know what the Fed comments are coming out. There's any type of missile. It's just hard. That's very hard. So if you can get yourself into the habit of not saying, oh, I want to hold on to it, just get in the habit of getting in on when you're supposed to get in, buying into that weakness, and then selling into that first rotation, you're going to consistently make profits. Anything after that, it becomes tricky because if you don't take your profits there and you get back down here, and you remember your entry is probably not going to be a great entry, so you're going to already get chopped up half the time. These are not as easy as it seems like. I mean, that's the perfect conditions if you're able to buy that weakness and sell the strength. That's perfect conditions. What I'm trying to explain here to you is you have an opportunity to make a mistake or have a little patience here. If you're quadded up, I like to say quadded up. If you're quadded up, you're probably going to eventually get some upside sooner than later. Sooner than later. So you might say, well, give yourself a little room. If you have a quad rotation, you had 1, 2, 3, 4, and it was like 7 hours, 4 and 7 hours. You know, that's not many, you know, and that's hard to kind of like wait around and trade that. And then you had one here, and not to say that you could just hang on and get some trades out of this, but the majority of the time, once you get oversold, it's not long before you get a pop. Pop eventually maybe fail, but you're going to get something. So when you think about that, we just had this here. So we just actually have this scenario right here, right? This is our quad right here. It actually was down a little bit more. It actually sold off a little bit more aggressively than I've seen before. But I mean, honestly, you would have to probably put it there because it was oversold right here. Maybe over a little. I don't know, wherever it is. Yeah, I'm going to try to always be realistic about everything because you're going to have some, for whatever reason, and sometimes it could be news or outlining news. Like this happened right at 8:30. It kind of spiked down a little, but now starting to move back up. So, like I said, if you get into that quad rotation, the chances are that you're going to get saved by the rotation eventually. It's going to move back up. Lots of times you'll be very close to the lows, but in this case, you can even go a little bit lower. And this could be, you have to kind of write that one off as, cost of doing business. There's not going to be perfect shutouts every day. And you got to take them off. When you get that trade, you got to take it off. And yes, it is being recorded. I record everything. Thanks, trader. But now we look back here, and it kind of gives you a little hope to say, wow, I've been over trading a lot. What am I going to do to fix my over trading? Well, just apply this rule because most of the time, and now I'm going to drop the bomb on you, all right? Most of the time, this is what this is. This is the quintessential, and remember that word. It's one of the best words out there. This is the quintessential setup. And when I use the Trade Alert network, which I'm so trying to get that consistent, but I want to just use it for, what I do is I'm telling you when the quad rotation is, because the quad rotation is part of the best setup. The quad rotation is part of a super signal. Quad rotation is exactly what we just went over. It is a rotation of all time frames. I'll call them the time frames. All periods, all four periods. And when that happens, underlying period, the time frames are all lined up. And this typically gives us a rotation back up because we see it, right? It's obvious. That's, if you tried to line up doing a puzzle and seeing what all the pieces come together and what's the perfect combination of where everything, where you have the most confluence. It's this right here. It's when you have these four stochastics set up. I spent nights and nights to 3 o'clock in the morning going through these stochastics and kind of lining them up and saying, all right, how do I get them all? And that's how I came up with that 44 and that 60-10. I had this program where I would tweak it live and I would see these things roll. So it was almost like tweaking everything until it all kind of came together. And I said, wow, look at this. All four of these are lining up, and this is exactly where all four of these are lining up. And I nailed it. And I said, shit, this is it. This is really, this is a big part of being on the right side of the market, or at least keep you out of the market. Now, how do we improve on this? The biggest thing about this, absolutely one thing, I'm going to get I want to let you hang here. Second, I'm just getting some ice. Hold on. I wish I had a donut. I need sugar. All right, hold on. We're going to take a look at the Coca-Cola stock next. I know, that's not good radio technique, is it? Anyway, well, I'm going to blow your mind right now. Not that I'm going to blow your mind. People in the room with me tonight, you guys know this. You guys know this. So when we had that light bulb go off with the quad rotation, I said, wow, this is amazing. How do we even make it better? Well, you have sometimes this amount of time, you have a window. It could be, remember, each one of these is one minute. So it could be here to here, and you're going a little bit lower and lower, but you have the quad here and it's going lower, and you don't really know if you're in the right, like all of a sudden you buy into the quad. You're kind of you're trying not to let me back that up again. Yeah, hold on a second. I hear my phone going off. So the thing that I want to wrap all this up with is, because we have such a good level to watch, but sometimes it can be a little choppy in this level. When the quad lines up with just anything else, I don't care if it's the VWAP, like here, or it's a divergence, which I really like. It could even be the previous close or a decent channel line, lower part of a channel line. When you have the quad line up with anything like that, it just increases the strength of it, and it really, then I consider it a super signal. Now, this ultimate super signal is a divergence inside of a quad, and that's what I call a quad divergence. And what a quad divergence is you have all four stochastics, and this is very special. And I'm doing a cheat sheet on this one next tonight, right after I get off the mic with you guys. You identify the downward motion in the stock, and it's kind of tight here, but we can see this. We do this enough that everything I do, I'm here in front. If I see two pivots, I'm putting lines in. So once I start to see that line, then we could start to kind of analyze, all right, we're down back, we'll probably maybe move back up. And once we get oversold, I'll put out that alert and say, all right, here we're entering our quad rotation zone. Or we're entering our quad rotation zone. And sometimes I'll say, watch for a bounce, and then a failure, and then a divergence. And that's what I look for. This is the and this is a minor one, meaning it's not a steep one, but you do have that little bounce, a little lower low, and a little higher low above the 20 here. You can barely see it, but it's a pretty decent angle. It's just small. And and then you can see that this is quadded out, and this is quadded out, and this is quadded out actually, but this one is higher. So when you have the 9.3 higher, and all the other ones, 14.3 could be a little higher too, but the other ones are underneath the 20. That's what we call the quad rotation divergence. Stop goes right underneath the candle, and you're good to go. And again, it's always about where this, we're not in these trades for more than 5 to 7 minutes. When we're getting that move up, I don't think we're going to be able to time it. Maybe you can. This is taking a nice little sweet little time to get up above 80, so you might be able to actually get it up here above the 200 period moving average. But you want to get it in here. Remember, if you recognize a divergence inside of a channel, you want to buy it as soon as you see it, because the channel is going to be broken. There might have been a little divergence over here. So we're always looking at these channels, seeing if there's a divergence. If there's not, and there's a channel line or a VWAP, that's what we're doing now. So even though we have a quad, we could time the quad down to the instant, down to the candle that you want to be in, is by a divergence. So you have a quad, and then you say, well, where's this quad going to eventually come out? Well, if you have a divergence in a quad, that divergence is going to be the bottom of the quad. That's going to be the spot. That is going to be your spot. There was actually one right here too. So you had a little low, little lower low. You see that 14.3, kind of hard. This is at 340 too, and it was a 9.3. It looks like we were looking at it. You put your stop underneath. Again, you're in the area. Remember, we're in the area. This one probably wouldn't hold this. I wouldn't hold 4 o'clock to 4:40 and eventually get it, so I'm not going to count that. You did get a little move up here, That was actually the 350 murder algo, which we liked. So I'm not going to go over the flags. I'm just going to go over that the quad rotation is so important that once we get down into that level, we have a much better chance of rotating back up. If you have a quad rotation and divergence, then you pull out your funded accounts, you pull out your regular accounts, and you take those trades with that. If you have a quad rotation and trend line, I consider that a super signal. Definitely a better trade to take. So anytime when you have a quad rotation, trend line, rising trend line, and moving average, you take that trade. And again, you don't have to really worry about getting out. If you get over that 9.3, most likely you should be taking it off, because that's proper etiquette, proper base running, whatever you can relate to. That's how you do it. Fundamentals. You're not gambling anymore. You become a piker. So now this is actually higher. We were talking about this level back here where we kind of got, and it moved a little lower, but eventually you are now higher on this trade. You're eventually higher. So even if you get in here on a quad rotation, and we have a good member, Reza, and he made a great little program for the tradeometer. And what it would do, it would buy the tradeometer, when I developed that years ago, was the first based off of multiple time frames. So basically, we're looking at it here. It's almost like when we look at the tradeometer and you get a signal, most likely you could see what's happening with the stochastics too. Stochastics will be setting up. You'll get a signal. So you got all these things working together. And let's take a look here. So Reza made a nice little program that would buy the buy signals, and it would just short. It would just go long and short, and would go long when all these got oversold, or when the tradeometer got oversold and went long. I have it running. I could actually get that thing running. I got to try it. I think I have it on this computer. I'm not sure. I'm going to restart the video here for a second, because we have it's called a mid-pattern divergence. You don't see this. It's like looking for you have a low, and you kind of have a little lower low. And you have the low here, but it's above the 20 line. Typically, that first low is below the 20 line, but this one's definitely higher. So you actually have that little divergence there. A little divergence. I call it mid-pattern divergence, meaning it doesn't get it's showing a little strength here. This is something, again, what time is it? It is 9, just kind of give you a relative setup. It is 9:17. It is not much going on. I'm not advocating any trades at this point. I'm just making commentary on the very little things that are happening to see if we see anything on this type of trade. Also, we see that sell side divergence too. I've seen, this is kind of that tightening of the pattern. You see that lower low. Let's watch that 60-10. See if we get up there above 80. See what happens if it turns on above 90. Anyway, that's just something we're doing right now. I'll get this video out. I think we covered the main thing is, making sure that that 60-10 is on your side. If you want to get a good feel of how many times you should be trading during the day, this is probably it. Unless you have a good divergence, when you have everything lined up for you, you probably have a good upside coming. This was all today. I mean, every quad rotation, I went back here and we kind of just measured it out. This was a quad. This is a quad. This is a quad. That's a quad. We could go all the way. Here's another one back here. See how this kind of coiled down? Kind of coiled down. Finally got oversold. So this would be one right here. Once you see a kind of a coil where it's not really rotating up, it just keeps on making these lower lows, that's very important. Right when they all come down together, that's your quad rotation. Go back out here. Here we have, what time is this? This is after hours. I think this was an earnings kind of, I don't know if earnings were pressuring the market. This was kind of a, you can't trade that going to, that's right at the close, 5 o'clock to 6 o'clock. Or actually, 4 o'clock to 5 o'clock. And then it reopened at 6 o'clock. So that's, the intense selling we get here. Once we have intense selling and you don't get those bounces, like you get these fast rotations, you might have a quad rotation, you might get in on the quad and you get that fast rotation and this is not really moving off of that, you probably should be selling. Every time, sell, sell, sell. Every rotation when this thing is embedded, that is very strong. Look, sell, 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 big sell. Well, anyway, I want to get that cheat sheet done for you guys, which will kind of really give you a flow chart on this next setup that we're, the big setup that we want. Market's here just choppy right now. So good night on the video and hello on the station.